Today in Crypto. Anthony Scaramucci, the founder and chief executive officer of Skybridge Capital, shared his thoughts on the turnaround where most open-minded Bitcoin skeptics always have upon studying the cryptocurrency. Speaking in an interview with CNBC, Scaramucci pointed out that those who do their homework by studying cryptocurrency are always fascinated by its potentials, using BTC skeptic Ray Dalio as his focus. Do the homework on Bitcoin. Understand what it is, he said. Anybody that does the homework ends up investing into it. Look at Ray Dalio, a Bitcoin skeptic, now a Bitcoin investor. Scaramucci also identified other big investors, including Paul Tudor Jones and Stanley Druckenmiller, with their portfolio holding stacks of Bitcoin. These are brilliant guys, who did the homework and drew a conclusion that they needed to own a piece of Bitcoin, he said. It is not an uncommon trend to see prominent investors and analysts change their minds about Bitcoin, especially with the obvious performance of the digital currency over the past years. Amongst the core skeptics of Bitcoin is American investment banking giant, Goldman Sachs, who told investors back in May 2020 that Bitcoin is not worthy of investments. Today, the bank represents one of the core banking institutions offering Bitcoin-related services to its rich clients. Bitcoin has strong fundamentals, has a limited supply of 21 million, of which more than 18 million is already in circulation. The premier digital currency has no central authority and is governed solely by a set of codes that network participants manage worldwide. The fundamental governing principles of the digital currency were laid out beforehand in the Bitcoin white paper that was first published in 2008 and authored by Satoshi Nakamoto. This white paper is one of the starting points Scaramucci recommends for anyone willing to know more about Bitcoin. Tesla, NASDAQ TSLA, the majo electric vehicle manufacturer headed by Dogecoin proselytizer Elon Musk, has hinted that it may soon look to restore support for crypto payments. In a September quarterly filing with the U.S. Securities and Exchange Commission, SEC, the firm stated it may in the future restart the practice of transacting in cryptocurrencies, suggesting Tesla is eyeing resuming support purchases made using digital assets. Continue reading on Cointelegraph. The share price of the Intercontinental Exchange-backed crypto services company Bakkt, $BKKT, has surged as it unveiled two partnerships with major global payments firms. On Monday 25 October, Mastercard, NYSE, MA, announced it would be working with digital asset platform Bakkt to allow its customers based in the United States to buy, sell and hold digital assets through custodial wallets. On the same day, global payment provider Fiserv, NASDAQ FISV, also announced a strategic collaboration with Bakkt to offer merchant-facing digital asset services. Continue reading on Cointelegraph. U.S. regulatory bodies have reportedly agreed that the Securities and Exchange Commission, SEC, will lead the United States' efforts to regulate the stablecoin sector. According to an October 26 Bloomberg report citing anonymous sources familiar with the matter, the SEC has reached an agreement with other U.S. agencies to take the reins on proposing legislation and overseeing the stablecoin industry. Continue reading on Cointelegraph. According to the announcement revealed by the Korea Economic Daily, the Korea Teachers Credit Union, KTCU, the second-largest institutional investor in South Korea, is planning to invest in Bitcoin as part of its balance sheet. The public pension fund would not purchase Bitcoin directly but get exposure to it via investment products like Bitcoin ETFs. The KTCU is seeking to invest in a Bitcoin exchange-traded fund when the first Korea-based firm launches a Bitcoin ETF in the first half of 2022. Of course, the Murray Asset Global Investment is preparing to launch Beta Pro Inverse Bitcoin ETF at any time next year. The Korea Teachers Credit Union is set to become the first pension fund in South Korea to invest in Bitcoin. However, the amount of funds to be invested and the exact time of launch still remains unclear. A KTCU official talked about the development and stated that the institution plans to consult with local asset management firms before reaching a decision concerning asset allocation. As there are some well-made cryptocurrency-linked ETF products by asset managers such as Korea's Murray Asset Global Investments, we plan to invest in the ETF products. After consultation with domestic asset managers, the KTCU spokesperson said. The KTCU is the first pension fund with $40.2 billion in assets under management in South Korea. At the current moment, the pension fund has allocated 40% of its investments in alternative assets, 9% in international stocks and 10% in domestic. The KTCU will also use the overseas stock accounts for investing in the Bitcoin-related ETF assets, the Korea Economic Daily stated. Crypto has a place in pension scheme portfolio. The decision by the Korea Teachers Credit Union comes at a time when crypto's widespread adoption across the world is significantly rising, particularly among pension funds. Bitcoin has experienced massive growth in the last year, significantly outpacing the S&P 500. Several experts state that the reason for such growth is contributed by lower stock market returns in the near term, fears of inflation, and investors looking for higher yields from alternative investments. Bitcoin is increasingly becoming a larger part of several institutional portfolios, including pension funds. Recently, as reported by Blockchain.News in February, the California Public Employee Retirement System, CalPERS, the U.S.'s largest public pension system, revealed that it increased its investment in Riot Blockchain Incorporated, a publicly traded Bitcoin mining company, from $49,000 in 2017 to $1.6 million in 2020. Pension funds such as CalPERS normally have been searching for higher investment yields by investing in private equity. However, in recent years, returns from private equity have underperformed in comparison to the S&P. As a result, institutional investors have been showing increasing interest in even riskier assets that may produce higher yields. This search has led public pension institutions such as Virginia's Fairfax County Employee and Police Officers Retirement Systems and the University of Michigan's Pension to announce plans to invest in Bitcoin and other crypto assets. Last week, Houston's Firefighters Relief and Retirement Fund in the U.S. invested an undisclosed amount of its funds in Bitcoin through institutional Bitcoin services provider NYSE. A few days ago, the crypto space got its long-awaited ETF products, and 2 U.S. Bitcoin-backed ETFs have already launched, thus bringing further acceptance of cryptocurrencies. With the success of the ProShares Bitcoin Strategy EFT, which garnered more than $1 billion in assets in just 2 days, chances are higher for the queue of other firms hoping to enter into the sector. The Valkyrie Bitcoin Strategy ETF started trading on the NASDAQ stock exchange on Friday last week, with 3.1 million shares changed hands during that day alone. All these demonstrate great interest among investors looking to invest in Bitcoin and other cryptocurrencies. Hit the like button and subscribe to the channel.